The silence is deafening. The charts are screaming a warning. And somewhere in the background, a key partner just issued a chilling ultimatum. Analysts are dropping their alerts. Whales are moving silently. The Shiba Inu team is facing a crisis of confidence, and new evidence suggests their lack of transparency could be fatal for the entire ecosystem. But what am I even talking about? Well, let me explain. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The Shiba Inu project was founded on radical decentralization and anonymity. This was initially seen as a defense against centralized control. However, as the project scaled into a multi-billion-dollar ecosystem, this anonymity became a critical liability. The core issue is now one of accountability and corporate-level governance. With a market capitalization of approximately $4.8 billion, investors and partners demand visible leadership and clear, consistent communication. The team's reliance on anonymity and long periods of silence has created a fertile environment for FUD, fear, uncertainty, and doubt to spread rapidly. This structural flaw impacts the project's long-term viability and its ability to manage crises, especially security breaches. The tension between the meme coin origins and its current status as a major DeFi player is the volatile backdrop to the latest, most damaging development. The lack of a clear, public-facing entity to address major concerns instantly undermines confidence and slows the necessary institutional adoption for the project's next phase. The market views this structural opacity as a significant, unmitigated risk. The community is now demanding a shift from the old ethos to a new era of corporate responsibility. The most compelling evidence of the Shiba Inu team actively avoiding transparency comes from a key ecosystem partner, K9 Finance DAO. A recent public announcement from the liquid staking platform revealed a deeply troubling timeline, prolonged silence, stalled leadership, and a widening trust deficit. This is a critical partner openly challenging the core team's integrity, effectively issuing a vote of no confidence. The central point of contention is the devastating September Shibarium bridge hack, which resulted in the loss of over $4 million in crypto assets. K9 Finance claims they fully cooperated with every instruction from the Shiba Inu ecosystem team immediately following the hack. However, after this initial collaboration, communication from the Shiba Inu leadership abruptly ceased. K9 Finance confirmed that multiple DAO private communication channels, once used to coordinate recovery efforts, have now gone completely silent. This pattern of initial engagement, followed by a sudden, unexplained withdrawal, reinforces the narrative that the Shib leadership is becoming increasingly evasive and absent when faced with serious problems. The silence is interpreted not as busy development, but as a deliberate avoidance of responsibility for the financial losses and damage to the ecosystem's reputation. The K9 Finance statement highlights that this communication breakdown has persisted for months, creating an untenable situation for a partner whose own token, K9, was directly affected. This has forced K9 Finance to take the drastic step of making their concerns public to uphold transparency and responsible governance for their own token holders. The market's reaction to the K9 Finance ultimatum has been one of cautious pessimism, reflecting the underlying fragility of investor confidence in the Shiba Inu project's governance. As of December 12, 2025, Shiba Inu is trading at 842 units. This price point represents a significant retreat from the token's all-time highs. The recent consolidation around this level indicates a market deeply uncertain about the project's future. The price action is not a dramatic crash, but a slow, steady bleed of confidence, a pattern more damaging in the long term, as it signals a fundamental erosion of the project's appeal to new capital. The 24-hour trading volume has settled at $114 million, suggesting a significant portion of the market is sitting on the sidelines, waiting for a definitive resolution to the transparency crisis. This reduced liquidity increases the token's susceptibility to large wallet movements, or whale activity, further increasing volatility and risk for smaller retail investors. The overall market cap, standing at approximately $4.8 billion, highlights the massive value at risk should the FUD escalate. Analysts note that the market is actively pricing in the risk of losing a key partner like K9 Finance, which would further damage the already fragile adoption rate of the Shibarium network. The lack of a clear public response from the Shiba Inu team to the K9 Finance claims only exacerbates this market anxiety, creating a negative feedback loop where silence fuels FUD and feed suppresses price. The market is demanding a clear, corporate-style response to a multi-million-dollar crisis, and the team's inability or unwillingness to provide one is interpreted as a sign of deep internal dysfunction. Beyond the communication breakdown, on-chain and technical evidence further complicates the transparency narrative, suggesting a deliberate attempt to minimize the severity of the September bridge hack. K9 Finance, directly affected by the hack, demonstrated a proactive effort to mitigate the damage by publicly offering a 20 ETH bounty to the attackers, a move that was ultimately rejected. This action by a partner stands in stark contrast to the perceived inaction of the core Shiba Inu team. The most damning technical evidence comes from an independent on-chain sleuth, Shima. According to Shima's disclosure, the Shiba Inu ecosystem team never officially reported the September bridge hack to law enforcement. This is a critical piece of technical and legal evidence that speaks directly to the team's commitment to accountability and investor protection. Failure to report the incident to authorities meant missing a chance to seize some of the stolen assets on centralized exchanges like KuCoin. This suggests a profound lapse in governance and a disregard for the financial well-being of the affected users. Community trackers show that the funds remain largely unrecovered, and the lack of a formal legal pursuit by the core team is a major red flag for institutional investors and regulators alike. Technically, a bridge hack of this nature often points to a compromise of the validator set or a flaw in the cross-chain messaging contract. The lack of a detailed post-mortem technical report explaining the root cause and the specific steps taken to prevent a recurrence further fuels the transparency concerns. This on-chain silence, coupled with the communication silence, paints a picture of a team that prefers to sweep major incidents under the rug rather than face them head-on with the technical rigor and legal accountability expected of a major blockchain project. The technical community is now left to speculate on the underlying security of Shibarium, which is a major deterrent for new developers and projects considering building on the Layer 2 solution. Analysts and expert commentators are unanimous. The K9 Finance ultimatum represents a major inflection point for the Shiba Inu ecosystem. The implication is that the project is no longer just battling external market forces. It is now facing an internal crisis of trust with its most vital partners. The core implication is the potential failure of Shibarium. K9 Finance is a liquid staking platform, a crucial piece of decentralized finance infrastructure for the Shibarium Layer 2 network. Liquid staking protocols are essential for increasing the total value locked and overall utility of a blockchain. Losing such a key DeFi component would severely hamper Shibarium's growth, adoption, and credibility as a viable blockchain solution, potentially leading to a cascading effect where other projects also reconsider their commitment. Expert commentary suggests that the team's silence is not only damaging their reputation, but also creating a dangerous precedent. If a major partner can be left in the dark after a multi-million-dollar security breach, what confidence can smaller developers or new investors have in the ecosystem? The situation is being framed as a test of the Shiba Inu team's maturity. Can they transition from a meme coin mentality to a professional, enterprise-level development organization? The current evidence suggests a resounding no. The long-term implication is that Shiba Inu risks being relegated to a historical footnote if it cannot demonstrate a commitment to transparent, responsible governance. The failure to address the K9 Finance concerns could lead to a significant outflow of capital from Shibarium, effectively crippling the Layer 2 solution before it can achieve critical mass. The entire narrative of Shiba Inu evolving into a serious, utility-driven project is now at risk, overshadowed by a crisis of leadership and communication. The reaction from the broader Shiba Inu community and the developers themselves has been mixed, but the actions of the core leadership speak volumes about their current priorities. Lead developer Kusama is notorious for his periods of absence, and he recently stayed silent on his X account for a staggering 84 days. While some community members defend this as a sign of deep focus on development, others view it as a complete abandonment of his leadership responsibilities during a critical period. This prolonged silence leaves the project without a clear voice or direction, allowing feed to fill the vacuum. Furthermore, another top developer, Kaal Daeria, has taken the drastic step of locking the comment sections of all his X posts. This action is seen by many as a direct attempt to limit the community's ability to engage, ask difficult questions, and hold the team accountable. The developers are effectively building a wall between themselves and the Shib army, which is the very foundation of the project. Social media sentiment is rapidly turning from hopeful anticipation to frustrated resignation. Tweets and forum posts are increasingly focused on the lack of communication, with many longtime holders expressing their disappointment and questioning their continued investment. The developers' actions, intended to perhaps shield themselves from negativity, are instead fueling the very fire they seek to avoid. On platforms like Reddit and Discord, the conversation has shifted from celebrating burn rates and new developments to discussing exit strategies and the potential for a rug pull by an unresponsive team. The most vocal community members are now demanding a formal, public address from the core team, not just a cryptic tweet or a blog post. The developers' continued use of silence as a communication strategy is now actively harming the project's reputation and alienating the very community that propelled it to success. The lack of a clear, consistent communication strategy is a failure of leadership that is now being amplified by the K9 Finance ultimatum. The immediate forecast for Shiba Inu is dominated by the January 6, 2026 deadline set by K9 Finance. This date is the most critical near-term event to watch, as it represents a hard deadline for the Shiba Inu team to demonstrate a commitment to accountability. If the Shiba Inu team fails to fully and verifiably compensate all users affected by the Shibarium bridge hack by this date, K9 Finance will hold a formal DAO vote to determine the viability of its continued business on Shibarium. A vote to abandon Shibarium would be a catastrophic blow, signaling a lack of faith from a major partner and likely triggering a significant market sell-off. In the short term, 1 week, 1 month, the market will be watching for any official communication from Kusama or the core team addressing the K9 Finance claims. A clear, detailed, and verifiable plan for compensation and future transparency could temporarily stabilize the price. However, the long-term forecast, 3 months, 3 years, is far more challenging. If the team maintains its current pattern of silence and evasion, analysts predict a continued decline in market relevance. The project's success hinges on the adoption of Shibarium, and without the trust of key DeFi partners, that adoption will stall. The only path to long-term survival is a complete overhaul of the team's communication and governance structure, moving away from anonymity and towards corporate-level accountability. The market is currently in a holding pattern, but the pressure is building, and a failure to act decisively before the January 6th deadline could lead to a permanent loss of investor confidence and a significant devaluation of the Shiba Inu ecosystem. The long-term success of the project is now less about technical development and more about political will and transparent leadership. While the evidence against the Shiba Inu team's transparency is compelling, a balanced opinion requires acknowledging the cautionary points and potential red flags for the FUD narrative itself. The primary risk is that the K9 Finance announcement is being used as a strategic pressure tactic. It is entirely possible that the public ultimatum is a negotiation tool to force the Shiba Inu team into a resolution, rather than a genuine desire to abandon the ecosystem. The fact that K9 Finance is a key partner means they have a vested interest in Shibarium's success, and a public break would damage their own project as well. The ultimatum may be a calculated risk to force the hand of an unresponsive partner. Another cautionary point is the inherent nature of decentralized development. The team may genuinely be working on a complex technical solution to the hack that requires silence, and their pseudonymous nature may be a non-negotiable part of their personal security. However, this defense is wearing thin. The neutral insight is that the Shiba Inu project is at a crossroads. The risk is not that the project will die overnight, but that it will slowly become irrelevant. The red flag is the consistent pattern of poor communication, which is a fundamental failure of leadership that no amount of technical development can fix. Investors must weigh the potential for a massive turnaround against the very real possibility of a slow, painful decline due to internal governance issues. The current situation presents a high-risk, high-reward scenario. If the team addresses the canine finance concerns and implements a new, transparent communication strategy, the project could regain its momentum. If they fail, the FUD will become a self-fulfilling prophecy, and Shiba Inu will likely fade into the background of the crypto landscape. The clock is ticking. January 6th, 2026 is not just a date. It's a deadline for the Shiba Inu team to prove their commitment to the Shibarmy. The future of Shibarium hangs in the balance, and the silence from the top is deafening. Will they step up and compensate the victims, or will they allow a key partner to walk away? The answer will determine if Shiba Inu is truly a dying token. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.